TJ the Wheel Deal coming at you live with another episode of Wheelers. I am here with the Greek god Dallas, Matthew, no BS options. We got Uzi options joining us for the second time. And then we've got Mr. Jade Lizard Labradoodle option over here from the Tasty Trade Mindset. How are you guys doing?
Awesome.
Good. We got a good one today, guys. We're going to talk about put credit spreads, call credit spreads, and then we'll really dig into my backstop strategy that is essentially the reason probably made half of the money I made in the stock market is because of the backstop trade. So anyway, who wants to start? I'm going to pull up put credit spreads according to Google. This is a Google AI thing. Have y'all noticed that these things are like a lot more in these Google searches now are like really, really cool? So according to Googly, it says that a put credit spread is an options trading strategy that involves selling a put option and buying another put option with a lower strike. It's also called a bull put spread. How it works, you sell the put options, you buy a put option with a lower strike price. Both options have the same expiration date and the underlying stock or ETF. Why it's used. Investors can use put credit spreads to earn income with limited risk. So it's a defined risk strategy, and y'all will hear that terminology a lot today. Investors can use put credit spreads to profit from the rise in the underlying stock price. Investors can use put credit spreads when they are neutral to slightly bullish towards the underlying price. Benefits. Investors can set a maximum profit and a maximum loss before executing the trade. Investors can generate income when the position is established. Investors can limit the amount of potential profit. Risks. The maximum risk is the width of the spread minus the credit received. The probability is higher that the option will finish in the money if the strike prices are closer to the underlying price. And then here it goes on to manage, you got all this Investopedia and all that stuff. But if we're just going to do all that, well, we don't really need each other and we don't need to do this stream. But that's just to give you guys an idea of a put credit spread. And then what I'm going to do is I'm going to pull up a put credit spread that I have. And then we'll talk about what I did with it. And then you guys can talk about what you would have done differently. So for those of y'all that watched the channel earlier today, Option and I have already dissected this trade, if you will. So we're going to start with Meta. I did a put credit spread. I sold these on the 24th, I believe, of January. So I sold the 590 and then I bought a little bit of insurance. I bought the 575 to make it a defined risk strategy. So in real basic layman's terms, I am just cheering for Meta to stay above $590 by the expiration date, which is in a little over a week on 2/7. And for doing so, they paid me $2,550 for tying up $15,000 in collateral. So a lot of people are like, well, how do you know the collateral? It's simply the width of the spread multiplied times 100. Multiply that times the number of contracts. So 1,500 times 10 is $15,000. So in my little simple mind, I was just thinking, okay, cool. I'm going to tie up 15 grand for about, 15 days or whatever it is. And you're going to pay me $2,550. And the mindset was, I'm interested in Meta at $590. But I don't want to sell a cash secured put down there because I'm tying up a lot of capital, because now we're talking about $59,000 a contract, and they weren't really paying a whole lot of premium. And I'm not really feeling that ballsy right now to where I want to do like a cash secured put at like 620 or 630, which would have paid me a lot more premium because Meta had earnings coming up, which were today. So I was just like, well, let me participate. I know I'm going to watch it anyway. I'm going to watch this stock. So let me see if I can just ring the cash register a little bit. And if Meta tanks, Now I'm going to be interested because I have the capital to turn this thing into a bona fide cash secured put. So that was the mindset. I want to start from top to bottom. Dallas, tell me what you like about the trade, what you don't like about the trade, and what you would have done differently given the circumstance.
I like the strategy. We spoke a little bit about this today. I do also like going a bit out of the money. For me, sort of the tasty trade, way is obviously you need to collect ideally 33% of the width of the spread. I'm someone who's willing to go even, and I've even heard Tom say like he'll go down to 25%. But that's like a, a bare minimum. Like you got to have at least 25% of the width of the spread in the premium that you collect for these put credit spreads. So try to get bare minimum 25%. That way, if it does go against you, you're collecting more of a credit in order to help you, manage the trade that's gone wrong. For me though, I'm looking to use a put credit spread where I'm not super confident in if my trade is going to go in my favor or not, but it's a company that I'm interested in, or if we're in just a bull market where, you look at Meta, the moving averages are so far away right now. Even the 50-day moving average right now is like 604. So we got to come from 676 to 604. The 200-day moving average is 538. So those would obviously be ideal spots to, sell a put, or a put credit spread would be when it comes down to one of those moving averages. Not everyone loves technicals. I do like basic technicals, support and resistance, as well as moving averages. But, in a market that we're in right now, Meta's not giving us those. In a market like we're in right now, I like to use the 20-day moving average. So maybe $629, and most likely it would, pull back to the 20 and then continue moving up. But if I'm really not confident in the strike price, in other words, I don't want to take ownership. I wouldn't feel good about taking ownership at 590. If my put credit spread does go wrong, I would look at, this is a defined risk anyway. I'm just going to go ahead and take the loss on the defined risk. Then I'm going to open up some actual cash secured puts at a level that I actually want to take ownership. So that would allow me, it's already a big down move coming from 676 to 590. And then if I take that loss, now we're at 590. Now I can write some actual cash secured puts for 560, 550. Now we're coming up to 200-day moving averages, 100-day moving averages. Then I'm more eager to actually own the shares. So that's what I would do. I would not actually, exercise your long put, basically cash out your long put and turn those into regular cash secured puts, because I don't want to manage them at those price points, because I don't necessarily feel that 590 is a great price point that I would feel comfortable owning hundreds of shares.
No, I get it. Awesome. Let's go with Uzi first, and then we'll finish with your option, because we already did a segment on this earlier. Uzi,
yeah,
you already have all the information. Just a fair, constructive critique, if you will, because I'm sure over the course of your career, you've done a put credit spread or probably 1,000. So what do you like about the trade, and what would you do differently, if you will? Any words of wisdom that you can share with me and the audience?
yeah, sure. So real quickly, I'm a visual guy, so I had to write, the notes down, what you did, and then look at it, because I'm that's just who I am, because I'm probably old. But pretty impressed by Dallas, because I don't know if he was looking at a chart or whatever, but he nailed the 200-day moving average. He nailed the 20-day moving average pretty much to a T on his numbers. So I'm like Dallas in the sense I'm a technical guy. I'm all technical. And I love this trade because, first of all, while I agree with Dallas, you want to try to get maybe 25 to 33% credit on the width of the spread, I don't use that as a hard and fast rule at all, because a lot of times that's hard. And to get that, everything has to pretty much line up right. And then even then I've done those and it doesn't necessarily work out. So I'm fine with, like, yours works out to be 16%.
Right.
16.6%. So that's fine, especially given the fact that your strike price is all the way down at what's the 88% retracement fib level from its most recent base area. So it's going to have to make a far drop to get to that level. So I love it because it's far away. And I love also that you have about a 90 to 92% probability of profit, because you sold basically an eight delta strike. So you've got a lot of the positives right there. The only thing I don't like is this stock has been up in price, closing price, for the last 8 days. And generally I wouldn't be selling a put, but because it's earnings and it has the chance to really rip up, or if it's going to fall, I mean, Meta is one of the biggest names out there to be bought besides Tesla. So they'd be the bottom fishers. So I really don't find anything wrong with this, other than, that many days up before you're putting that on. And if you could have gotten maybe 20%, 25% of the width of the spread, would have been better. But I would do this trade, with you, sure. They're just not the same size, but I would do that trade, yeah.
So I think, to give it a little bit more color, I think it's important to go to the day that I put the trade on, right? Because Meta, and I guess we can get even more specific. I don't know if it'll tell us exactly the time that I put it on. No, I guess it doesn't go that, does it? No, I don't think it goes that. Maybe, I don't know. Here we go. At 11:02. At 11:02. So let's go to 124 at 11:02. Your Honor, I want to point to. No, I'm kidding. So we're going to go to 11:02 a.m. TJ has this bright idea that he wants to do this, and Meta is at 6:37 at that point, give or take. Maybe I'm doing it wrong. It's over here. 11:02 a.m. So Meta is at 6:45. So when it was at 6:45, I was thinking, I'm interested at 590. I'm really interested at 550. But if I do anything in the 550, well, there's no juice in that limit. So my idea was, well, let me throw them out there at 590, just kind of as a feeler bet. I'm going to be looking at this thing. I'll probably even listen to the damn earnings call. But I don't even have a dog in this fight right now. You know what I mean? So I feel like I'm going to waste a lot of my time. So I want to have a little skin in the game. So this was the only way that I could justify having skin in the game. These are all the, a lot of the thoughts that were going on in my head. And obviously now we see where it's at. So there's a real good chance that I wake up tomorrow, provided that this move holds. And this thing's probably in the 75, 80% range tomorrow. And provided there's enough liquidity, I might just be able to take the trade off the table and lock in a win and call life good. So let's talk about that aspect of the trade now option. And I would like for you to chime in. When do you call life good on a put credit spread that's gone your way? You have something to add, Dallas?
Yeah, could you just explain? I know in the past, a lot of times you've done $5 wide strike spreads. Can you explain why you chose to do $15 wide this time?
Dude, you don't even have a rhyme or reason, dude. It literally was just one of those things that, like, have you ever gone to the gym and you're like, I'm going to work shoulders, and you end up working legs because it just felt good when you walked in there? No, I'm serious, because normally
that never happens. I don't ever go to the gym meaning to do something and end up training legs. But I can tell you I've many times gone to the gym. And I said I'm training legs, and then I saw a pretty girl, and I said it just became arm day.
Yeah. International Chest Day.
Yeah.
So I'm weird. When I'm like really in the zone, I actually enjoy training legs because I have really skinny legs by nature. So I feel like I got to work them that 2 or 3 times a week to really try to get anything out of them. And then I was also in powerlifting, so the legs were like everything, right? But anywho, so I don't know. I really don't know. I think maybe I was telling myself something like, if I buy the put way out of the money, like pay less for the insurance. Maybe it increases my profits or something. I really don't know. Like I don't have like an actual reason. Whereas if it's just like a standard cash secure put cover call, I'm down. But this is showing where this is a lot lower in the word chest for me, right? This is not a go-to move for me, but whenever I do them, I tend to have pretty good success with them because I feel like I'm chicken shitting with them from the standpoint that I'm like so far out of the money. I'm almost daring Mr. Market to actually challenge me here. You had something you wanted to add, Uzi, before option takes the floor?
Yeah, and I'll be really short and quick. That was a good question, Dallas, and I didn't think to ask that. But here's the thing: I thought you did it just because you have, let's say, a nice size account. But I would have to say, to start a position of a spread, I don't like to go that wide because if you have to open it up because you have, well, then again, you're willing to take possession. But if I'm working with someone,
I'm willing to close out the long and turn it into a cash secured put.
Yep.
Manage that cash secured put in the back of my mind, knowing that if I still don't want to keep tying up that collateral, I could just buy another long call and release all that collateral, right? So you can roll in different stages, if that makes sense. Anyway, option, take it away, my man, and educate us on the tasty trade way and everything.
I mean, the way I do it is, for one, like we already discussed, I wouldn't have been in the weeklies, right?
Yeah.
I definitely wouldn't have been there. And that's just due to liquidity, right? And then the bid-ask spread. So I wouldn't have been in the weeklies. I would have been in the monthlies, probably the 23-day. I definitely, I would have had to have gotten at least close to $5 for that spread, right? At least $4.50. Because, the way I look at it is the more money I take in, the better for me. I'm willing to risk 2 to make 1. And I want to keep it as close as possible at a 2-to-1. I'm not trying to get 4 to make 1, 3 to make. That's just too much capital for me. And I mean, I agree with the wider the spread, right? Because you want to give those deltas, as we know, we want to give those deltas enough room to move, meaning the short delta from that.
Yeah, because I feel like when you have a 5 wide spread, guys, like aren't these deltas just kind of like offsetting each other? You're almost forced to. You're almost forced to go the duration of the contract, in my opinion.
And you're going to be in there forever. And the thing is, even with a $15, $20 wide, you can still just roll it, the whole vertical spread. You can roll it. You don't have to break it down or, I don't like to put on a position and then take off legs. Right, because now either you adding risk or you have to add more collateral. If that was the case, you should have just did it one way from the beginning. But
so the reason that I didn't want to, and it's because Bill's in the comments, so I'm going to chime in for him. The reason that I wasn't willing to sell a cash secured put on Meta is we have to go to the genesis of the trade and the genesis of the mindset. Meta is not in an area right now that I'm actually interested in the stock. So this was the only way that I could justify in my mind to be so far out of the money. Yet, if I'm willing to sell enough contracts, I can ring the cash register to where it's still kind of worth my while in my mind. And then I'm going to do the roaring kitty that if this thing starts tumbling down, now I'm kind of leaning forward because now you got my attention. And damn well I'm not opposed to doing a cash secured put because that's what I built my life on. But I want to do cash secured puts again at prices that I'm actually halfway interested in the stock, and I'm really only interested at 550. So with that mindset, Meta's just not. I'm not able to ring the cash register on Meta if I'm going to stick to my guns at 550. Mr. Market ain't going to pay me shit for doing that. So I was just trying to manufacture a trade, if that makes sense, and then I'm hoping it went against me. So that now it could potentially get on the books in a more serious way, but all the while I was going to watch the stock or stock the stock, like I like to say, and I wanted to stock it to the tune of $2,500, if that makes sense.
Yeah, but at the same time, even if it doesn't go your way, the objective, I believe, is to make money, right? Regardless. Yeah. So my thing is, if I'm gonna, execute a trade, then I'm going to shoot for the highest profit that I can make quickly, right? Because that far out of the money and that far back, you're gonna be in that for a while. And I mean, you got a couple of more days left, but still, you're gonna have to be in it for a while. you know. So, and I mean, you only got two deltas. You're only working with two deltas. Your short delta is a 3. Your long delta is your short delta is 6, and your long delta is 3. So you're only working with two deltas.
Yeah.
Right.
So I guess let's just go top bottom, because this is what it's all going to come down to. So is $2,550 on $15,000 in capital for about a 12-day trade sufficient? Because that's what it can. And considering where Meta was and now where Meta is, because obviously we know that I won this trade, right? It's pretty obvious now because we saw that we had the answers to the test now. Meta's at about 694, unless it totally tanks in the morning. I doubt it will. Is 2550 on a 14-day trade, or whatever the math is on it, right? Give or take 14, 15-day trade. Is that sufficient on utilizing $15,000 of capital? Because I'm going to show you another trade that I did an earnings play, and I played it differently because I was gearing up for this discussion. Because the real discussion I want to have when we're all done is, are put credit spreads more capital efficient than just cash secured puts? Because cash secured puts, I mean, let's look at how much money it would have done. It's 10 contracts, 559. You're talking about you're talking about 590 grand in capital is what I would have needed, right? If I would have done 10 cash secured puts at that level, I couldn't justify doing that because it's not at a price point that I'm even really interested, if that makes sense. So it's kind of like playing poker, and this was a bluff, and I was like, if I get caught bluffing, well, then I'll take a stand. But if not, I wanted to cash grab, but I didn't want to use as much capital, if that makes sense. So Dallas, we'll go down the road. Real quick, just a yes or no. For you, given everything that we know about the trade and my mindset and the way that you look at the market, you have a lot of experience as well. Is $2,550? Is that enough juice in the lemon for you in this particular situation?
Yes.
Option. I think the answer is no. Option.
No.
Hell no. Go ahead and throw the hell no in there. What about you, Uzi?
Yeah, definitely. It's 17% on your money, and you don't have to wait 14 days or whatever it is, 10 days. You could take that off tomorrow for at least 50% profit, most likely. So it becomes a one-day trade if you really want. And even if you only make 50%, you make it 8% overnight. I'll do that every day.
And that's the thing, right? It's great when it works, right? But when it doesn't work.
Facts. Yeah, because I think what the point that we don't want to miss here on options mindset is this one's fine and dandy because we already have the answers to the test, and it's obviously going to work out for me more than likely, right? But let's say this thing
that 2-3 times at the same amount, and you take that one loss, you're gonna wipe out all your winnings.
Unless you turn it into a bona fide.
Right. But that's the key option. And I'm thinking along TJ's mind is that he's gonna sell that long for profit and then take the stock. And then to that point, if I could just add one little nuance, because option knows his business. But here's one thing about the deltas: the further away they are, yes, they do. The closer they are, the more they compete with each other. But if you're going to look to make a profit on that long put, you want it as close to your short put as possible because it's a higher delta. So, no options 100%. But if you are going to look to take advantage of that long side by breaking it open, then you want it closer so you can make more money on that long side. That's the only thing I'd say.
Yeah. Were you aware that earnings would be during that trade? Because
yes,
that certainly helped you. I would have liked to have known. I would have liked to have seen. I would imagine you would not have been able to collect enough to make it worthwhile.
So I was thinking of little things that I didn't even know they were really going to come into play. But I was like, well, I think I'm going to be the beneficiary of some IV crush, right? Because when you're selling options, you want the IV to be high, and then after the binary event, theoretically, that alone's going to help me a little bit in this trade. This is a little bit that was going on, but it's a little more nuanced. I wanted to keep the conversation a little bit more basic, if you will. But because I did another trade for earnings as well, and it's on our beloved Tesla. So I did just the regular old way of doing it, and just what I'm in my lane. I'm sell cash secured puts. So here I did this one on January the 16th. Same time frame, 14 days, right? Give or take 15 days. And I got 44.66 for something pretty way out of the money as well. I feel about this trade kind of the way that I feel about Meta at 590, where you've got my interest, but you don't really have my interest unless it's like 300, if you will. But now let's look at it. I had to utilize $350,000 in capital to get 44.66. So comparing this to the Meta trade, my goodness, dude, I do the Meta trade 20 times over. Because I'm not that excited about selling cash secured puts whenever they're feeler bet cash secured puts, meaning I don't even have halfway of an interest in owning Tesla at 250, even after the things that I've heard about, like the robots are coming and all that stuff. That's cool. Well, what does that add to the bottom line? I mean, I'm just looking at it. And again, this is my favorite stock, so I'm not really knocking Tesla. I'm just saying I do live in this land, this reality. And I just feel like, we're betting on the come. He's selling us a real beautiful story. But at some point, I mean, the metrics got to get better. They've been in the toilet for a year and a half, 2 years. And it was a double miss, right? I just thought the earnings were shit. I mean, just calling a spade, a great call, but the earnings were shit. So I'm like, I knew the earnings were going to be shit because they had missed on deliveries, right? So they already gave you the answers to the test. That's what I love about Tesla. It's pretty easy to know what's coming down the pike. But I was like, well, I'm just going to stay in my lane. I want to deploy capital and I'll get the 44.66. But I'm like, if you don't think you're getting sufficient money on 15,000 in capital when they're paying you 25.50, when what world is 44.66 sufficient for $350,000 in capital? Dallas, you want to take that one and we'll go all the way down?
What was the question?
We asked if 25.50 was sufficient return on 15,000 in capital on the put credit spread on Meta, and then now we can ask, it's the same time frame, is 44.66 a sufficient return on $350,000 in capital on Tesla?
Yes. It's a 30-day. What's the expiration?
It's a 14-day trade, I think.
Oh, yeah. Yes, for me again.
Option.
No, man. I mean, because like I say, I mean,
no, and that's fair, but let's elaborate for the audience. That way we can understand where your mind is.
Because if we look at if we take saying I want to get far away as I possibly can, right, and add on contracts to get 44 and spend 350,000, that's, you can't say later for the risk, right? Because that's that tail risk, right? And my thing is, you can construct something for way less and make the same thing. And that's my thing. Like, I just couldn't see myself, regardless, going that far away, because, I just, when I look at it, I look at that tail risk and I'm like, it looks good. It's supposed to look good. For every give me, there's a got you, right? But if it goes against you, that's when it's going to hurt, But if I'm closer and I'm within that, 20, 30 delta, I'm not going to take on as much pain because I've got a gigantic amount of credit.
Right.
And see, my thing is, this is when now you can use leverage. You can use leverage by, if you're selling that cash secured put and you have taken in a enormous amount of credit, go and sell the other side. It costs you nothing to now take in more credit on the other side. Right? Because that's what it's about.
Most people can't do that though, because they're using Robinhood.
Right.
Yeah, but that, we've been down that path already. But and that's my thing. That's where you now have to make a decision to put your capital on a platform that will allow you to do that.
100%. I agree. 100%.
See what I'm saying? Because I want to be able to.
Also, when you sell the other side, now you have a naked call. So if that stock reverses, now you get out of your put, but now you just went back to an undefined risk trade because you have no shares and a naked call.
But that's not what you do right there, man. What you do is now, okay, let's say it reverses, right? It's about rolling. Roll it, turn it to a straddle, right? It's all about the credits that you are accumulating. The more credits you are accumulating, the more you widen your break even. And then by widening your break even, remember, if we use the bell curve, at some point the stock is going to slow down and stay within the range. So it can go all the way up, all the way down, but we look at that range.
So you're saying turn it into a straddle by buying a call at that point?
No, like say for instance, we sold a put, right? The stock dropped, like you said, and then it reverses and come back. Well, if it drops down and it goes, for me, if it hit my strikes, I sell the other side. But let's say now it reverses and come back up.
Yep.
What I'm gonna do is I might have to roll my put up. Right now I'm taking in more credit. Right? If it keep going, I just keep rolling, taking in more credit. Then what I can do is I can break that trade apart and then widen it back to a strangle. See, because that's like we can't get away from the fact that it's all about credits. And the more credit you got, the more you are able to do things that you want to do. You know, and that's how I play the game. You know, I just love to play it that way because I know that all I care about, I have to take enough money in for the trade that I'm doing. So if it goes against me, now I have other options to be able to manage the trade until it settles down. Because at some point, it has to settle down and go and stay within your range.
Buy the gut, sell the wings. That's what he's saying.
You can, if you have to, yeah, you adjust. And when you buy the guts and sell a wing, all you're doing is now repositioning that, using the credit that you took in and reposition the trade. Mm-hmm. You're not losing anything. It actually can help you, you know. But that's if the trade goes against you. But if you're not taking in enough premium, you can't really do anything.
Yeah, I get it. Uzi.
Yeah, I'm
tying up 350 grand for 15 days on Tesla at 350 to pick up $4,500. Yay or nay?
No, this one I wouldn't have done.
Okay.
A couple of things about it. Technically, I just don't like. It's not so much the money as much as the technicals. This would probably be a very high probability that it gets challenged or gets in trouble. So I would have shied away from it, just given the technicals that I see. So I wouldn't have done it.
You really think it's going to get challenged by Friday?
Is it the 7th?
No, we're looking at the wrong one. No, I'm talking about the Tesla. Let me back the train up. So this one here, it has to go to the fib, I think the 61, I believe, to get to.
Yeah, exactly. It's the 61, and that's
for 131. So I'm collecting massive amounts of theta decay now, because just like that tail risk can work against you, well, it's kind of working for me now, because this theta here is a lot of what that option price consists of right now.
I thought this was February 7th as well. Yeah. It's only 2 days till expiration. All right, that changes things a little bit, but the thing I don't like is that, you know, today especially, and the last 3 days, it's been really teetering on the 50-day moving average. Is it 50? Yeah, and you've got the 200 a far way down, so it pierced the 50-day, and you know the 61 and the 61 fib is not far for Tesla. Yeah, I wouldn't have done it either way. Just, you know, either way, 2 days away or the extra 7 is 9, because you know it did break the 50-day. The 61 is not too far away, and the delta is a 17 delta based on what I looked at. Actually, no, that's
17 right here.
Yeah, it's a pretty high delta. The only thing it has going for it is that the stock has been down 2, 4, 6, maybe 7 or 8 days in a row, but not dramatically. It's been kind of like methodical selling. So really no fear. It's just been like a methodical selling going on. So it could keep trending. But then again, we have now, you know, hindsight to look at and see today with the earnings that came out, you're good, right? Because the stock got up in the aftermarket. But if I didn't know that, looking at it on this technicals, I wouldn't have done this one.
I think that's fair, but I think that there's one concept, and I want to go from, we'll start with Dallas and work our way. You always got to go back to why'd you put the trade on, right? Like that's a question, that's a valid question that needs to be answered before you ever place the trade. Can y'all agree on that?
Yeah, absolutely.
Yeah.
So the reason I put the trade on is because I got 4,000 shares, and at some point I want to own 5,000. So I'm like, okay, Optimus is coming, FSD might be coming, etc. If not now, when? Because I've got freaking covered calls and I'm going to be babysitting until Elon lands on Mars. You know what I'm saying? Like I've already got a situation with Tesla, so I'm trying to stockpile some credits because at some point this thing's going to cost me a couple $100,000 if I really want to remedy it, unless I'm willing to just tax harvest loss roll year after year after year for the next 5 years until I catch up to the stock. It might take longer than that. So I think that I wanted, and I pinned y'all, like I did this on purpose, is because there's not a one size fits all for anything, because you need to be able to see the entire position and the entire mindset, because it's like down in distance watching a football game. And then the only thing that people are able to see is the score, but they don't see like what's going on in the huddle, what's going on with the coach and the players and everything that they're running and they're trying to. You don't see the halftime adjustments. You don't see any of that stuff. We're not privy to that stuff, right? As spectators of the game, we only get to see the score and the down and distance. So that was a lot of that mindset had to do with it as well. So I think that there's two perspectives is what I'm trying to say. There's the perspective of the actual trade itself, and then I think there's like the play within the play, if that makes sense.
Or it should be, or would you say this, or the proper question would be, how would, if we wanted to accumulate shares at a certain strike price, what would we do?
Yeah, that's true. Yeah, with knowing that you actually want to get 1,000 more, that changes the equation a big. Yeah.
Yeah, because I think if you're looking at the technicals, you're looking at all that stuff. You're like, I'm cash grabbing, right? We're just trying to get this premium and move on our merry way, and that's fine. But I'm really trying to accumulate. I don't necessarily want to own Tesla at 350. If the market would give me 300, dude, we're not even doing an option. I'm just going to buy the 1,000 shares outright, because then now the position's full, and then I have more firepower when it comes down to roll the 340s that are 350s, whatever it was that I got caught in, because now I got that extra 10 contracts that I can throw at it to kind of ease the pain of the debit that's coming my way down the road.
Yeah, and to Option's point, if I could just say this too, knowing that now, then you probably could, let's say, have gone half the size and then wait to see what happens with the earnings. Because what if this thing did tank 50, 60 points? Then you can get in even lower with the other half. So you could have maybe used half in for pre-earnings and then half in post-earnings.
Gotcha. Dallas, I know that you have a position in Tesla, and I know you've been in a situation with Tesla where you're underwater on covered calls. Dude, truth be told, when this thing tanked to like 370 something, I was like, dude, I'm going to be able to wake up tomorrow and finally address that damn 340 call. Like, I'm going to atone for some sins tomorrow. And then Elon started talking and this shit went up again. It's just like, son of a gun, like I thought that this really was my chance, because I knew the earnings were going to suck because the delivery sucked.
Yeah, I do want to clarify. I thought you were simply asking, like, based on the amount of collateral you put up, was the credit sufficient? I would say
Correct.
yes.
And that was the question.
Okay. Yeah. Based on the technicals, I wouldn't have done that specific trade either. I just wanted to say that, but I felt like the credit was sufficient for the collateral. We didn't have that other information that you're trying to get more shares. So I guess that in a sense makes it almost risk free if you really want the shares at 350.
Is that 350 or 300?
350. I know it's 300 is the dream. 300 is the dream, but it's not likely to happen. wherever. So.
Me for 350, and just knowing I don't mind taking the shares at 350.
Yes.
I'm just gonna go to the 78 day and sell the 350. I'm gonna take in $21.70.
And then you put yourself at like a 330 cost basis.
There you go.
So
now, I would do that. I would do that. Mm-hmm.
So if you have a
Dude, I looked at that. I looked at that trade option.
Mm-hmm.
if you have a cash get put that's challenged, when you sell the other side, do you take the cash secured put off, or do you roll that down and out, or do you just, what do you do with the cash secured put side?
It stays there.
It stays there.
Mm-hmm.
Okay. Until when? Does that ever get rolled, or do you just see if you get those shares assigned to you?
Well, it will get rolled depending on, like, say for instance, I got challenged, and if I got challenged, right, what I'll do is I'm gonna sell the other side immediately.
Yeah.
When I sell that other side, if the stock keep going down, then I'm gonna constantly keep rolling that call up until I roll into a straddle, right?
Wouldn't you roll the call down? Because if the stock keeps going
down, down, roll it down to the cash secured put.
Right.
So now when I get there, I have two options that I can do. I can go invert it.
Yep.
Or I can buy them guts and now resell the strangle out. Now I'm pushing that. I'm a push my long put down to probably where the stock price is, and then just readjust.
Yeah.
Right. Depending on how hard the stock drops. So I'm never going to do anything to the side that's being tested unless I have to.
The buy the guts is a tasty lingo. Could you explain that?
Well, buy the guts and sell the wings is just you're closing out your straddle and repositioning your position. That's it.
Okay.
That's all it is. You're just restructuring it to, fit to just to follow the stock.
Right.
Right. So that's all you're really doing. You're using the credits to follow the stock. So you got to think, and this is why if I'm taking in $21 and I sell the other side and I take in, $5 or $6 and I just keep rolling up, I might have $40. From that $40, I can take it, roll that whole straddle out to the next expiration. I'm going to take in some credit. Let's say that's $45. Now I can use that $45 to reposition my straddle or my strangle around the stock price. And let's say that $45 might cost me $30. So I can still make, $15 off of that position as long as the stock, find its, stay where I need it to stay.
And if your extrinsic value kind of gets pulled out a little quicker than you expect, and you don't have time to necessarily roll that call down several times, right? Let's say it's a big drop, now you're at low extrinsic value on your cash secured put, meaning you don't have time to make several rolls of the call down before it gets equal to your cash secured put. Does that change the game because your risk of assignment is more imminent?
No, because like I said, if it drops all the way down, like it don't, let's make it clear. If it drops all the way down and it's no extrinsic value left, and I see I can't do nothing, then I might have to take the shares, or I just have to take the loss, right? But that's if that does that, But if it doesn't do that, then yeah, I can roll it straight to a straddle. I can go invert it, But it just depends. But you normally might not have to worry about it. That's if you're taking in enough credit from the beginning. That's why I'm so aggressive on the amount of credit that I take in from the beginning.
Right.
So if I know I'm taking in enough credit from the beginning, then and then you have other options where you can just roll it out further, expirations, and then take in credit to get it out. But it just depends, But yeah, that's how we always do it.
Let's get to another one.
Mm-hmm.
On, I don't know. I don't even know when I did this one. a few days ago, on 123, I got into another 14-day cycle, and I did a put credit spread on Palantir. Again, Palantir is simply not at levels that I'm interested in. So it doesn't fit my criteria to sell a traditional cash secured put, because my deltas for a cash secured put would probably be like, I'd have to be probably like in that $73, $74 range, give or take. And I have absolutely zero interest of owning Palantir at those levels, so I can't deploy my favorite option strategy, which is a cash secured put. But I wanted to be in the game. Earnings is coming up, I think the 3rd of February. And I know that I'm going to be listening and I'm going to be watching and stuff. So I wanted to get paid money for investing my time. And I rang the cash register a lot with Palantir, but I don't currently have anything in this account. So I want to reestablish this relationship with Palantir, and I wanted to do it with put credit spreads at levels that I'm halfway interested. And here at 65, I'm only halfway interested. I'm not really interested in Palantir unless it's got like a 5 in front of it. But that being said, it's $25,000, I think, in collateral, because it's five contracts, or it's a $5 spread, which is more customary to what I normally do. And it's so it's $500 a contract, and it's 50 contracts. So 25 grand, and picked up $3,350 in credits for essentially a 2-week trade. So let's just go down the road. Based on that, do you think that is sufficient capital, or do you think that's a sufficient return for that duration? And then also the risk, because the risk is Palantir could plummet. And now my plan is to close the long side and turn these $65 put, or essentially turn those into bona fide cash secure puts at 65, manage them, roll them until I can get a 5 handle on them. And then I'm actually legitimately interested in picking up 5,000 shares in the 50s on Palantir, because I think it's going to be $1 trillion company and I want in. So Dallas, do you think that there was enough juice in that lemon to put that trade, or would you have just faded the trade altogether?
I would have faded the trade simply because we saw how eager the market is to sell off Palantir when the market starts turning. So I mean, like, it sold off 25%, like, quick. Like, there were like 1, 2. I can't read these type of candles, but it looks like to me like there was about like 9 out of 10 candles in a row, 9 out of 10 days in a row, like, were red. Some of those were really big drops. So, Palantir is sort of the golden child right now of the market, but a lot of people do not have super low average costs on Palantir, and so if they start to see that their shares are going in the negative, that's how you see that quick downward movement. And so, if the overall market really turns, I would be fearful. That's how we get. I mean, in my opinion, for the only reason Palantir stopped dropping was because the overall market sort of turned around. So that's the rising tide of the market brought Palantir back. But Palantir was going to the 50s. If this whole DeepSeek thing had happened like last week, we could have seen Palantir definitely in the 50s. Or like maybe 2 weeks ago. That's when Palantir was really experiencing its fall. So I wouldn't do that, not because of the credit being insufficient, but to me, it's just not a good setup based on how strong Palantir has been over the past year or more.
Gotcha. What about you, Option?
I just couldn't. I could never risk to make less than 1, right?
Okay,
I mean,
that's fair.
Yeah.
What about you, Uzi? Anything to add on this particular trade right here?
Yeah, I got to buzz out on this one too with Option. I don't like the technicals on this one. This looks like maybe a topping formation pattern, and all you need is one nuance of a comment in all of their comments in the conference call, and this thing could blast right through the recent swing low, and that's about 63. I know you said you want to own it in the 5s. So,
Yeah, I do.
you know, I would at that point, and you didn't take, in this trade, I don't like what you brought in versus what the risk on is. You know,
Yeah, because I sold 44,000 shares at 79.87. So I want those shares back, but I want them in the 50s.
Yeah.
I don't want to sound like a Palantir hater because like valuation is not my thing.
No, but this thing, come on, this thing stretched, bro. This thing stretched like the Kembe Mutombo. What are you talking
Well, look, the Palantir community is very sensitive. Okay, they've been
Dude, I don't give a shit about these Palantars. We're talking about reality here. Beans matter.
they've been basking in their glory for a long time now. So I think everyone's been trying to call a top now for quite some time. So
yeah, and at some point, somebody's gonna be right.
Somebody's gonna be right.
To pull a marker on you real quick.
Yeah.
So I'm saying that's the goal. The goal is I want those shares back, but I want them in the 50s. Hell, if the market will give me the 40s, I'll take them in the 40s. But it isn't just those shares. It isn't just those. You know, I got a bone to pick with Palantir. You know what I mean? Like I got, you know, I think there was 24,000 shares at some point. So you're gonna see here 15,000 shares were sold at 59.62. So the chickens are coming home to roost. You know what I'm saying? Like, I want those. I want them all back at that level right there, and I'll be comfortable. And then I don't mind trying to pick a lot more up because I felt like the position. I know it might sound silly, but I just felt like the position was never big enough, and then I totally misplayed covered calls. And I left a lot of money on the table, but I do feel like Mr. Market is going to give me another opportunity to make this one of the core positions in the portfolio again. So I just wanted, I used that put credit spread to make sure that she stays on the radar, if that makes sense.
And see, to add on, if, you know, the way and like how I like to do the strangles, man, you would have never lost those shares, right? Because you would have been following that stock up, right? You would have been following that stock up from taking in credit, going inverted, buying it, reopening it, reselling it, using the credit. You would have been able to follow that stock all the way up, right?
Option. Would you have gone inverted on the put side? So you would have sold puts above the price to get the shares back?
Yeah.
It don't matter what they sell, Bill. Bill, I'm ringing the cash register.
Yeah, you get. I don't mind because you know when you go inverted, it's just all you paying back is the width of you know, of the spread, right? So yes, you can go inverted because it's all about the credits that you take in. The more credits you take in, the more you can manipulate the position. And the thing is, if we sell covered calls, right, you don't want to get rid of your shares. You don't want to lose the shares. So that's why we come up with the strangle, sell a strangle around, or do a vertical spread, right? Because that helps. If you want to sell a covered call, don't sell just a call, sell a vertical spread, a call vertical spread. So if the stock go up, the call, you know, you're gonna make the money from the long call, right?
Which is a call credit spread.
Yeah.
So on that note, we're going to pivot because I think that I would still own a lot of those shares if I was willing to do call credit spreads as opposed to covered calls, because I do think that there's a time and a place for my least favorite, and I want to say it again loud for the people in the back of the class. This is my least favorite option strategy. It's like a golf shot that just doesn't fit my eye for whatever reason. This one, and then the second least favorite is an iron condor. I am literally like, I'm batting 0. I'm 0 for 5 on iron condors. And dude, every last one of them, I could have sworn that this one's for sure going to work this time, for real. There's no way I could lose this trade. I mean, for real, there's no way. And then all I did was lose money. And I learned, you know, because when you lose, you learn, right? Or hopefully you learn. And I learned that me and iron condors, we ain't tight like that. Like I would never in my career even entertain another iron condor because there's something about them that feels too good to be true. And it doesn't end up being real for me. And there's so many people that have success with them. God bless them. God bless you. I'm glad that it works for you. I'm the guy that's having trouble with the curve, and I just wait for my fastball. You know what I'm saying? Like I'll do it in the batting cage with fake money or something. But I've lost 5 times with these damn iron condors and call credit spreads. I don't like them. But let's talk about it. And I'll have y'all talk about them. Call credit spread, also known as a bear call spread or short call spread, is a type of option trade that involves selling a call option and buying a call option with a higher strike price. So it's the inverse of a put credit spread. Mm-hmm. The seller receives a premium for selling the lower strike call. The buyer pays a premium for buying the higher strike call. The net result is a net credit or amount received for the seller. The goal is to profit from a falling stock price. When to use it? When you expect the price of an underlying security to fall, when you want to generate income while limiting risk. And the benefits, it is limited risk. It's a defined risk strategy. It can be profitable with time decay and decreased implied volatility. Can be used to make a high return on a small amount of money. Risks, the trader could lose the entire premium paid for the call spread. The maximum loss is the difference between the 2 strikes minus the net credit received. Who would like to take it away on that? And I'll put up some shares here. I'm going to put an example of a company that I am heavily invested in, and I have a lot of squatters. I have a lot of squatters right now in this company, and I'm about to have a lot more. I'm about to have 200 contracts, 500 contracts, 1,000 contracts, all expiring worthless here in a couple of days. But covered calls have been a little bit of a pain in the butthole. And I'm thinking maybe TJ needs to go to school. And instead of covered calls, maybe I need to try to make amends with call credit spreads. That way I can define the risk. And if shit goes against me, I could, thank God I have the insurance and still position myself to make money. So Dallas, I know you're a lot more familiar with call credit spreads than I am. Take it away. How would you implement the call credit spread right here with SoFi? Let's pretend that all of the shares are unencumbered, because they're about to be. I know it says I'm using 30,000 of them, but there's 150,000 shares and there's 1,400 long calls as well. And I want to bring the cash register, but I don't want to sell my shares, because that's the number one thing people say when it comes to selling covered calls, right? Like, I like to sell covered calls, but I don't want to lose my shares. Well, I think that the call credit spread, if it fits your eye, I think that is an ideal strategy for that. It just doesn't fit mine, but I'm trying to make it fit. That's why we're having this discussion. So what can you tell us about call credit spreads, and how would you implement one here, and walk us through the dynamics, and we'll go down the road.
They don't really fit my eye either. The times where I like to use them is obviously if a company that I don't have any shares in becomes extremely overbought. So, if I don't have if I have the shares, I can just do a regular covered call. If I don't, then I can use the call credit spread in order to basically sell covered calls without owning the shares. If you don't want to do a naked call, which would obviously put you at a defined risk, undefined risk. The other time I like using them is if, let's say you have 1,000 shares of SoFi, and I still like to be a little bit more patient. So let's say let SoFi come up to like 50, 60 on the RSI. Let's say you have 1,000 shares, so you can do 10 contracts. I would do 3 contracts to begin with, and then if those contracts are challenged, my next step would be obviously manage those however you want. If you want to do Tasty Trade, sell a put credit spread. But
real quickly, and I'm cutting you off on purpose. You mentioned 50 or 60 on the RSI, because that signifies that it's approaching oversold status. I feel like 70 is the number, right, for oversold. That's what I was told when I started the technicals years ago. Yep. But what chart do you use? Because I always toggle with all of them, but my go-to is always the 1 month because I feel like I at least have a pretty decent baseline. But which chart are you talking about when you say I'm looking at the RSI at these levels?
I'll do the daily, and then I'll look at it on. I like using stockcharts.com, and
Sure.
it's really like it's an ancient. It's like it's an ancient sort of website, but it's a little sentimental because it's the first website I use. But secondly, I like it because unlike TradingView, Webull, a lot of those things, you can use your mouse to alter how the chart looks and make it look more steep or more flat, and so it can change how I view what the stock has done. Because if you like scroll down and you're on TradingView, you scroll down, it's going to flatten out the peaks and the valleys. So that can manipulate like where I feel is a good place to put a lot of different trades on, because I like to buy when a stock has become oversold. I like to wait for it to start to flatline a little bit before I start to enter. Otherwise, you're catching a falling knife, like what happened with Intel a couple months ago. It fell like 25% on earnings. It's like, oh, this is amazing, and the next day it was like another huge drop, and then another big drop. But if you're using like TradingView, you can scroll down on your mouse and make almost anything seem like it's trading sideways. So, but anyway, so I like to use the daily, and then I go out to the yearly because look at 12 months, because that's going to give you multiple areas of support and resistance you can look at that have been have happened over the past year as opposed to just the past month. But where I would start to use the call credit spread is so we got 1,000 shares, we got 10 contracts. So 70 is obviously like the ideal RSI, but if you're buying at 30, it could take like some time to get to 70. And I know you and a lot of others are more eager to put those calls on. But I have found if you can at least be patient enough to wait for your stock to get past the 50 on the RSI, because now you're talking about several standard deviation moves to challenge what I'm about to explain. And so if your initial batch of covered calls are challenged, so if I had 1,000 shares, I would sell calls against 300 of those shares after it's crossed 50 on the RSI. So if my call strike gets challenged, now we're probably approaching 65 to 70 on the RSI because we were already past 50. So at that point, now I'm going to start using some call credit spreads, and I still got 7 contracts at my disposal in my back pocket. So then I put on the call credit spreads at 30 delta. If those get challenged, I'm willing to take a full loss on a max loss on the call credit spread. Now I'm deploying my 7 other contracts, and that stock's probably going to be in the 80s or higher on the RSI. So I'm collecting so much premium, and the capital appreciation is going to make up for whatever I lost taking a max loss on those call credit spreads. I'm not going to be too sad because those shares are going to be way higher. So that's what I would like to do. Now you're selling 7 of your 10 calls at an extreme, probably like 80 to 90 on the RSI, and then that's like almost free money.
Yeah. So they're talking about in the chat, there was a plane that collided with the helicopter, and it says 2 injured on the internet. I think in Washington or Washington, D.C., I guess. So, that sucks. These things happen, right? But anyway, what about you, Option? Call credit spreads. Is that a big part of your arsenal or not really?
Yeah, definitely.
Okay.
But I only do them on stocks that move.
Okay.
Right. So it has to be a Tesla. It has to be
I was hoping you would say that, because I feel like I have the perfect stock for call credit spreads if I could just get more comfortable with them. Because I got this bad boy right here, and I got a crap load of shares. And yes, you know, a lot of them are stuck over here in covered call land, but I did buy 700 leaps. So there's a lot of covered calls and call credit spreads that I could ring the cash register on. So can you walk us through like how you would set it up? I know we're selling a call, we're buying a call, but what are the deltas? Like, what are you using? Like, can we see, like,
well, see, the thing with me is that I wouldn't do it on like Riot, right? Because Riot doesn't move.
Shit, we're talking about this thing will go 15% tomorrow.
I mean, you know, it ain't gonna go nowhere because, you know, but it doesn't move. If I'm going to do that, it has to be on a stock that move Coinbase, right? Those stock move. The risk is to the upside, right? I need stocks if I'm going to do the call credit spread. You know, that's the only reason why I'm gonna do it. If not, then I just do the regular call because I can manage stocks like that, right? And then, like Dallas said it the best, and a lot of people don't do that. And if you challenge, just take the call, just take the loss, and start because you're getting appreciation from the stock. Just start the cash.
But I thought you wanted a stock that has like high IB because then there's going to be good premiums and freaking Riot's IB is higher than Coinbase.
Yeah, but Coinbase going to give you a
that's the number one indicator. That's the number one indicator for collecting premium. It's not stock. It's IB. It's implied volatility.
Yeah, but I'm talking about in regards to the movement. If you look at the move. Riot might got a $2-3 move, but Coinbase gonna give you a $15 to $20 move. So it's gonna move faster, and you're gonna have So I can manage a $3 to $4 move if that's what it gives me, right? But I can't manage a $20 to $30 move at any given time. You know, so that's why I would do it that way. You know.
So walk us through setting one up. That way the audience can see.
Okay.
Because I don't have a call credit spread on the books because I don't like them. So we have Riot here. What would you do? Where do you sell the calls? Like what delta?
Which one?
Is it like a regular covered call for you?
Look at Riot. Look at Riot. And see, it's no money in there. So I can't mess with that. It's no money in there. You talking pennies, cents, right? It's nothing in there.
There's like 1,000 contracts I can sell on one.
Well, that's
but I'm saying, but I'm saying walk us through the dynamics, irrespective of whether or not you would do it or not on this stock. I mean, the trade's going to be the same, right? So let's
do it on the stock that I would do it on. That's the only way it makes sense to me. Because I mean, now it's just let's go to Tesla. Go to Tesla.
Well,
let's use something that
I don't have any that I could actually do it on, but I mean, we don't have to fill it anyway. So what do you do? So you go trade options, and we're selling a call and buying a call. But I'm saying, are you doing the monthly cycle? Like what?
Okay. So when I'm selling, if I had shares, right, I'm always going to sell 30 days out.
Okay.
Right, 30 days. It depending on if it's a monthly, but it has to be a monthly. So in this instance, if I was going to do it, I would do it at the 23-day. Right?
Because you want to be in the monthly cycle. And guys, what we're talking about is the third Friday of the month.
Exactly. Now, let's say, for instance, you just bought 100 shares, right? You in the money. Let's say the stock is 390. You just bought 100 shares. 30 days. I'm gonna sell the 390, and I'm gonna probably sell the 400. That's gonna give me $4.20.
So you're going to sell the 390. I mean, you wouldn't do like the 410 because I mean, it's already at 405.
Well, okay, if it's at 4, yeah, because that's aftermarket. So if we was at the 4, I would do the, I would do the 400s in the 410.
So you're selling the 400 and you're buying the 410. Okay, so obviously it's not going to even let us do it right now, but still.
But that's if I had the 100 shares, right? But with the 100 shares, that's how I'm gonna set my position up.
So you're selling the call like at the money, or in this case, slightly below the money.
Right.
So walk us through that mindset right there, because I'm having a hard time understanding why you wouldn't want to qualify for like more capital appreciation, because immediately your cover call is underwater. while you're doing it. So it's like, I don't know that I want to live in that kind of stress. So walk me through the mind of option right now.
The reason why I would do that, because like I said, I only do it on high flyers, right? I know the stock
Sure.
gonna move. I don't have no risk to the upside because that long call, if it goes past that long call, now it's going dollar for dollar up, right?
Yeah.
So I'm cool with that. So that's why I would do it on a stock like that. So that's how I'm looking at it. Like, really, I'm buying that long call. I'm actually financing that long call a little bit, by taking in that $4, or I forgot exactly what the premium. I'm taking in $26.30. So I'm financing that long call because it's only costing me $18. So, but it's gonna work, right? Because if Tesla shoots up to 500, now that long call is going to take on, and then I can just still shut the position down. Now I'm gonna lose the shares, of course, right? You're gonna lose the shares, but at the same time, you still making max gain.
Mm-hmm.
Now, the flip side, because I like to look at it both ways.
Yeah.
If it goes down, I'm getting max credit, right? I'm getting max credit.
So you're making it worth your while because the premiums that you collected on the short call are substantially more than the premium that you paid for the long call. In this case, it's about $2, give or take, $2.50.
Yeah. So and for me that works.
So what you're saying, worst case scenario, you're going to make $2, give or take the spread, right? Best case scenario, this thing goes to the moon. So you're cheering for this thing to go to the moon. See, I was under the impression that when I saw call credit spreads, I've done a few offline. I don't like them because I feel like I don't really, like, my brain's just not getting it. You follow me?
Yeah.
That's why I sell puts, I sell calls, I collect premium. I roll when it makes dollars and cents. And oh, by the way, I make a shitload of money because I am doing what I understand, like, wholeheartedly, versus just like wanting to put on a trade for the sake of putting on the trade just to look all clever. But I'm like, is it really going to ring the cash register for me? And am I just like living in a situation where I'm not super comfortable? If that makes sense. It's just like when I've done call credit spreads, I really don't even know what team I'm cheering on, because I read and it says you can't
for it to go down.
Yeah,
Can for it to go down, right?
Mm-hmm.
But at the same time, if it goes down, if it goes up, depending on if you have, 100 shares, it can help you. See, the thing is to not have no risk like me. My thing is I don't care about all the risk to the downside. I can manage that. My thing is I don't want no risk to the upside because I cannot manage that. That becomes a problem. You see what I'm saying? So therefore, I'm always trying to construct a trade to not have no risk on the upside. If I lose the shares, I lose the shares. So be it. But I don't ever find myself in that situation. But if I'm going to do that, I got to be right there at the money. I got to be right there. I'm not going too far out of the way to, I'm just not going to do that, because I have to get paid, man. I just have to get paid, Because if the stock go down, I need to be able to at least protect some of the, share price depreciation as it go down, so I have to be aggressive.
Uzi, what can you contribute? Option, those are really good things. I'm excited to go watch the segment because that's when I get my learn on, right? Because I'm trying to keep the string going right now, so it's hard for me to like take it all in. And that's why I love having people on, because then I can go watch it after and be like, have that aha moment off camera, right? And I'll probably reward myself with a soda and an ice cream if I figure it out. Because, dude, I've had this conversation ad nauseum with call credit spreads, and I just don't think, it's like, I just don't think that she likes me. Like, you ever like that girl and she just don't like you back? You know what I'm saying? Like, I feel like that's kind of where I'm at with call credit spreads. Uzi, talk to me, my man. Is that something that you utilize, and what's your methodology whenever you do, if you do?
Yeah, we use them a lot. In the Discord, we do a lot of call credit spreads. Now, it depends on the setup. If I'm doing them as an iron condor, it's a completely different setup. So I'm putting risk on the put side, and I'm putting risk on the upside, the call side. But there's a couple different scenarios. Now, if a stock's been running up, or an ETF, because we're in XLV, XLY, and XLK right now, call credit spread. So they were part of iron condors. We took off the put sides as it ran up, and now we're finagling our way out of the call side. But so if something's running up, I'm definitely either going to sell calls on it if you have the buying power. If, I have the buying power to do that. But if I'm concerned about someone else who doesn't, it'll be a call credit spread. And, as long as I have a nice RSI above 60, 65, or 70, and the charts, it's on the upper boundaries of the Bollinger Bands, or maybe even outside the Bollinger Bands, I'll go close to what Option was saying. Maybe I really probably wouldn't go at the money, but then again, I think Option was referring to you having those shares to lose. So so it changes the whole scenario. Yeah. If I have shares to lose, then I'll be a little bit closer, because I do know I have the backup call to go with it. But an idea for you to consider, TJ, is you can do something called a Jade Lizard, which is, it's like an iron condor, except you're not buying that put wing. So
I've done one on the channel. I did it with Option a couple of times, and I didn't know if I was on the Cowboys or the Eagles. You know what I'm saying?
You were on both.
And this ain't no paper trading account. You know what I'm saying? I'm like, baby, I'm not in teams right now. I don't even know.
In that type of trade,
sort of stuff.
No, you're good, because in that type of trade, you actually have a couple of Cowboys on the other team, because in that trade, you're selling that put. It's a big enough premium to cover the short price.
Into a Celtic, man. I was very nervous.
But yeah, I do call credit spreads, definitely. Not a lot, not as much as I do on the put side, because unfortunately fortunately we're in a market that kind of drifts up, right? So you don't want to be finding a way, trying to fight your way out of call credit spreads all that often. But yeah, I love them. Sure. If there's an opportunity and the stock's high IV, high RSI, outside the Bollinger Bands, sure, I'll go in with some good size on those. And then I'll keep the strikes close, though, only because if I have to roll a few times, I can always widen one at a time, instead of starting wide and then having to open up my legs wide. And now I'm just going to take it, where.
So you have shares. Let's just talk about it, because I feel like, give me a thumbs up if a lot of you guys are lost, because I'm actually more with you than I lead on. What happened, baby? I'm actually following a lot more than I lead on, because I've been doing my homework on these things, and I'm trying to make peace with these things. You know what I mean? Like, we signed the peace treaty, and we did the compromise of 1850. You know what I'm saying? But you have these shares. You have this bucket of shares. You got 1,000 shares of your favorite stock, whether it be SoFi, one of the miners, Palantir, whatever it is, and you want to, I got a baby, and you want to ring the cash register, but you have been programmed to not sell covered calls against those shares, because you don't want to lose those shares. Because there's a lot of people on X that say, don't be selling covered calls, because you're gonna sell your shares for peanuts, and then it's gonna go to the moon, and they act like it's illegal to ever get back into that stock. I mean, they make it sound like covered calls are, the freaking Lucifer, and fell out of favor with God, and God shot his ass down to hell. You know what I'm saying? Like, that's what I read on X all the time, and it's kind of hilarious to me. But I know how to manage covered calls, but sometimes it does backfire, because it is an undefined risk to the upside, right? Like, it's one of those things. Whereas here, you're buying the insurance on top of the short call. So worst case scenario, your long call prints. So this is the part that my brain is unclear on, and this is why I don't do them. I'm always doing it on stocks that I own, right? Like, I own these shares. So I sell the covered calls, so I'm contractually obligated to deliver those shares. And then I'm buying the insurance policy on top of it. Let's talk about the mechanics of the trade, right? Like to me, people need to just keep it simple, right? Because it is simple until you complicate it with your verbiage. So you sell the short call because you own the share, so it is a covered call. We're not able to do anything naked on the Robinhood platform, so I'm talking to these people right now. And then you buy the insurance policy on top of it. That way, if it goes up, you have your protection to the upside versus you're not looking at like Palantir go to 60 and 70 and making videos about valuation to justify why you sold the covered calls, right? Because I've been there. I probably made 10 of those videos. Look at the archives. So walk me through the dynamic, because I get asked this question a lot. What happens to your shares? And I don't have like a straight answer for people. I'm like, that's why I don't do them, because this is important for a lot of people. Because I think there's a lot of people that try, quote unquote, fancy strategies, and a call credit spread is not that fancy. But what I'm saying is, if you don't really know all the gimmies and gotchas, it is my belief that you probably should not participate in that option strategy. Mm-hmm. So walk me through it. I got 1,000 shares of Tesla. Let's just say I bought them outright. And then I'm going to do call credit spreads on those because I listened to this segment and I'm convinced that my shares are going to be okay because I bought the insurance policy. So walk me through the dynamic of how the trade unravels if I do nothing. Like, in other words, if I don't push any button and it expires in the money, walk me through it. What happens?
All right. So the first thing, you already know what your loss is going to be, right? Because
defined risk, it says.
It's defined risk. So depending on if you want to do a $1 wide, $2 wide, $3 wide, it just depends on what it is, right?
Yeah.
So
it says right here, it's a defined risk.
Yeah. So it's a defined risk. So even when your shares are going up, you can't lose or make no more than what your credit that you took in. So let's say you took in $1, right, on a $5 wide, you can only lose $4. So if you just shut that position down, you will still keep your shares, but you will be losing $4 per contract. That's it. Now, if it shoots up to the moon and that long call is making you so much more money, and your shares are making you so much more money, it's all fine. Because remember, it only costs you $4.
So my buddy's saying, let the shares go and ride the long calls to the moon.
Exactly. No.
I'm saying this is what I've been told offline, and I'm like, I'm not convinced. So I want to have this conversation with you guys, because I'm like, again, the mindset is you don't want to lose the shares. I'm giving you a scenario. Pay 40 grand or whatever, 400 grand to buy 1,000 shares of Tesla, and I want to read the cash register, but cover calls have cheated on me, and I don't want to do cover calls, so I'm going to go experiment with call credit spreads. Uzi's laughing because he's got a Discord and this kind of shit. He deals with it all the time, right? Yeah. So walk me through it, like convince me, if you will, that it's going to be okay. Because anytime I've helped coach, if you will, people on cover calls, it's like you got to coddle them and baby them like little babies, because they act like I just took one of their kids to the fucking pawn shop. You know what I'm saying? And then we don't get them within 30 days, they're going to change their last name and sell them in the black market. I mean, it's crazy. So walk me through it. What's going on with my shares if I do nothing? Do I have to manage this trade is what I'm saying? Or does the brokers know how to unravel it for you because you want to keep your shares? Like, I think it's important to know how to get in and get out of a trade is what I'm saying.
What's going to happen is, being that you're going to be in the money, right? Both of them is going to be in the money. So what's going to happen? It's going to offset. It's just a regular spread, right? Because remember, if you're taking the spread, and if it's a $5 wide, you taking $1 credit, you cannot lose no more than $4. You don't lose your shares. The benefit of financing that long call, that if it gets above your long call, you're going to back to making dollar for dollar with the shares.
If you don't do anything on a put credit spread and shit goes south and you don't want to manage it, you don't have the dollars, you don't want to roll it, you essentially can take your maximum loss, is what you're saying.
That's it.
But I want to mention.
I know a little bit more than I lead on, right? I like to play dumb because it makes good for views, and just like, oh my God, I can't believe he has all that money working and he doesn't understand it. I understand it a lot more than I lead on. Trust me. But Dallas, you have something to add, and I feel like you poked the hole that I poked a long time ago, and that's why I'm like this for call credit spreads. I don't like them. Go ahead, Dallas. Talk to me.
What you just mentioned, and I'm not sure if it could be true with a call credit spread. I haven't heard of it. I suppose it could be, but if you have a put credit spread that goes against you, and it's now your short leg's now in the money. There's a very rare scenario that I've read about online. In the Money did a whole video on it. The YouTube channel In the Money. There's a scenario where with Adam. There's a scenario where even if it's after hours and the stock was to tank, the opposing party could actually decide, you know what? I don't want those shares anymore. Put those shares on you, and now your long put is expired. So now, if the next trading day, you could have hundreds of shares put on you, and if that stock goes down, people have lost like millions and millions of dollars, and they thought that they were in a risk-defined trade, but they didn't close it out. So it's wise to actually go ahead and close out the spread no matter what, just in case, because that has actually happened where after hours the stock tanks. You thought you had a defined risk trade.
This person is saying gold right here. This happens, but it doesn't happen until midnight. Guys, there's a very horrible use case in Robinhood where the kid has on defined risk trades.
Yeah.
And he sees a ridiculous amount that he's down on his account, and he actually takes his life. They interview the parents and stuff, and then the balance was re-rated, if you will, like, because when all the math happened, it didn't actually happen until midnight, 2 a.m. or something like that. This is a true story. You can Google it. And they interviewed Vlad about it too, right? It's a very unfortunate situation. So you could look at your broker one day and have a WTF moment, you know what I mean? But then I think they do you a solid, and they close you. And they close you out. And I think this is the best comment of the night so far.
Just one thing to add on to what Dallas saying, and that depends, because what you got to make sure you can have a person that at any given time can throw you shares, but if they do that and you have a lot of extrinsic value left in that contract, then that's money that you're making.
Exactly.
Yeah. We're talking about it will not just only be a paper loss if they actually put those shares on you because they change their mind after hours, which you do get. You get like a small window after hours where you
30 minutes per the Chicago Board of Options Exchange. I did a whole class when I was younger over there for a week.
So
it depends on how we got this, how the trades are set up, because I'm looking at it like a little bit different. So
I'm saying, like, you had a put credit spread. Let's say you had that put credit spread at 590, like TJ had for Meta. Mm-hmm. So it's up to expiration day, and it's at like 580 or whatever, and you're like, you're fine. But then after hours, they have earnings and it drops to 500. Then all of a sudden, that opposing party can still put those shares on you after hours, but now your long put has expired, so you have no more protection. So you wake up the next day, you could have several hundred or several thousand shares of Meta, and
but you just close it out.
Yeah,
just close it out, because if both of them because you've made the money, right? So you just have to close out those shares, because even though that long put expired, it made money.
Right.
That's not like that didn't make money as it went down, but you just have to close it out.
Yeah. And depending on the broker, they auto exercise for you. So to Option's point, you're covered in that sense. And I don't know if I'm understanding it, really properly, Dallas, but I know you probably know this, but no one person can ever like put something on you. It's done by the CBOE. So it's going to happen or it isn't going to happen. And you really have no control, and they can't take it back. If you get assigned, you're assigned. They can't say on Monday morning, we're going to take it back because we made a mistake, so you're good, and
that's just based on, I've never had it happen. That's just the video. I thought I'll put it out there because,
maybe they were a little off on some of their, variables on the story.
Yeah.
But usually most brokers, I don't know. I don't have experience with Robinhood or some of these other, no commission discount brokers. I mean, they probably they have different rules and they have different ways of handling it. But I would think if both are in the money, you should be okay. Yeah, you should be okay.
Good stuff. Real quickly, guys, I want to touch on, and I don't have a whole lot of time, My wife already came in and kind of gave me the eye that we got to go to sleep at some point. But I want to just talk about it, and then we'll do a whole other episode on it. I've already done a couple of episodes on this already, but it is what I call the backstop trade. This is the cornerstone of my strategy. It's where I take a stock and I'm like, we're going to dance here and we're going to dance all night. And I'm going to get on a knee at the end of the night and I'm going to put a ring on your finger. Like, this is where I'm like, I'm going to break all the rules. This isn't going to be any of this cheesy stuff where it's just 5% per position or no more than 20. And, you know, all the stars have to align and we're going to go visit the Mayan ruins and go back to the Mayan calendar. All of these rules are just out the window. So what I do is when I see an opportunity and I'm like, I really want to own shares. I want to own shares of this stock at this price. And I'm going to go super, super, super heavy because I'm trying to compound my premiums. So I sell a leap put. I sell a put in the distance and I do a ridiculous amount of contracts. And then I take that premium and I sell short dated contracts. That way, when I add the 30%, which is what I go for that annual trade, if you will, and then I'm going to have all of that premium to work with to sell short dated puts along the way. I'm going to look up and I'm like, I got 40 to 50% on my money over that period of time. And that's how I'm able to beat the market every single year by a long shot, just on premiums alone. And I do it on a stock that maybe a lot of people, it might not be for you, and that's okay. You got to find the right situation for you. But I'm going to walk y'all through this backstop trade that I did recently, tied up 2.2 on cash secured puts. It was really 1.5 because the other part is over here, but it's this trade right here. I took CleanSpark, and I was like, I want to dance with you, and I want to dance in a real big way, but at $7.50. So on 122, I was like, hey, Mr. Market, if you'll give me $214 a contract and give me a break even of $5.36, I'll commit to buying 200,000 shares of CleanSpark at $7.50. And Mr. Market's like, okay. And I couldn't believe that there was that many crackheads that were willing to do it. And I did it 200 contracts at a time because that's all that Robinhood will allow you to do. So it's 200, 200, 250, 200, and so on and so forth. And I got that average that I just showed you guys. And I take all of that money, which was about 428 grand, and I sell short dated cash secured puts. And I try to win those. I try to win those so that I look up a year later and I'm like, dude, I'm just crushing this thing. And I theoretically still have a cash secured put that is out of the money. And this is the second year in a row that I did it with CleanSpark. In 2024, I run the cash register, was in the trade for 90 days total, and profited $261,000. Never took possession of a share. This time around, I'm playing it a little bit differently. I got 25,000 shares. So I'm running a version of the cover strangle against those shares. And then I've used the premiums from the cash secured puts, and I sold more cash secured puts short dated at $9.50. And then I took more collateral and sold cash secured puts at $8 because I want to get to a zero cost basis before I even consider taking ownership of these shares with quote unquote other people's money. So poke holes in it, ridicule it, whatever you guys want to do. Let's start with Dallas and we'll work our way around. This trade is not for everybody, but it's my bread and butter.
Yeah, I just wouldn't do it right now on CleanSpark. Obviously, for that, that's like the most risk that you're putting on. So I would really wait for like more of a sniper like entry with that one. So I don't have a problem using that strategy. I just would be very picky when to use it, because if you're wrong, then it's not a good situation.
Yeah, because I recently did it on SOXL, guys.
But I like it. I like it overall.
I collected a crap load of premiums on SOXL. You guys will see 131, 129, and 129. and then I got another 29.4, bought to close these right here. So I locked in that money, and then I gave back 327. If you look at the 327, it's a lot less than the 131, the 129, and 129. So I had all of this because this one had run up to like $25 or whatever, or $35. And I was like, I don't really like SOXL on a longer term basis. There was actually somebody in the chat like, hey, it would make more sense if that one was, you were doing it like, like 2 or 3 weeks out versus so long because of like all the NAV erosions and everything else. So then I just looked down the list, and CleanSpark was the one that gave me the best opportunity. I wanted to do it on SoFi, but there just wasn't enough juice in the lemon. Amazon definitely wasn't enough juice. Riot had already gone up too much. I would have done it on Riot, but if Riot was like in like that $8 or $9 range, it would have been ideal. Hood wasn't. Nothing else here was paying any more money. The only one that was actually a consideration was Enphase. Like I considered doing this on Enphase because I have a bone to pick with Enphase, but that's exactly the reason I didn't use Enphase, because I feel like there's not a healthy relationship there right now, if that makes sense. So, but I had considered doing them on Enphase right at the money. So it was going to be like at 60, $62, $65. But I'm like, I'm not quite getting the money that I'm looking for there. Because I got to tie up $6,000 and it's paying $13.85. It's just not, it wasn't quite there. So I rocked with a more risky play, if you will. Option?
I mean,
what about Coinbase? Would you do it on something like Coinbase that you're such a believer on? Because you've been banging the table on Coinbase since I met you.
No, I mean it's not wrong with the trade. I mean that's your trade. That's something that you're comfortable with. That's something that you do, right? So I mean,
yeah, but it's definitely not for everyone, guys. So a lot of people try to follow me on these, but you got to understand, dude. If shit goes south and this thing goes to $6, you got to be comfortable, because now the ROI looked real good getting in, but then now you got to be like, okay, like I'm about to own a shitload of these shares, and I'm just like, I know that as long as I don't go below my break even of 536, I'm not going to manage the trade. I'm going to take ownership and also cover calls at 750 and keep ringing the cash register and hope I'm able to get $1 or $2 of capital appreciation, because it's $200,000 for every dollar, right? So I'm looking at, how can I make $1 million here? Like this is literally like when I swing for the fences, this is what it looks like, so to speak. And I have also a negative cost basis on CleanSpark of about $4 or so. So I have, I kind of have that on my side. If
that joint go to $6, man, you might not be able to sell no calls against that.
Shoot, dude, this thing was at $3. I'm trying to pull it up, dude. I'm just see what the actual cost basis
might be like 8 cents.
So the actual cost basis on CleanSpark right now, guys, is negative $21.40. Because I've played this game a little bit with CleanSpark before. It's been it's been good to me. And again, this is the first time I've owned shares in the company, 25,000 shares right now. So I got a cost basis on those shares at $9.90. But when you take into account all of the credits, all of the credits over here, and we'll go profits, right? So you saw over here on the wheel, it tells you the call profits have been $22,000, and I brought in $760,000 in credit so far. So been good for $750,000 on CleanSpark. And the idea is to take advantage of the crypto boom that we're in. And this thing pumps to like 12, 13, $14, which is my belief. I'm going to look up in about 3 or 4 months and be at like 50% or whatever, and be like, cool, just made another 150, 200 grand. And I take the trade off the table and see if I can find something else a year and a half down the road. And that's how I play. But I have yet to be in these backstop trades until the end, if that makes sense. Uzi, what do you think, Uzi? Because this is definitely breaking all of your rules from the Discord, I'm sure.
Can you help me understand this a little bit better? I must have zoned out when you were describing. I know you're selling long dated puts at 5 in the 5 area or 7.
750 right here.
Okay.
So,
And you're
right
using
here.
those funds to then finance the other put sells. Or
Yeah,
not?
so I got 428 grand is what we got.
Right.
And then I used that money to sell shorter dated cash secured puts, which were these right here. I sold 400 at 950 that expired on Valentine's Day. And then I took more monies because if you look at the whole position, there's 2.2 million in collateral, right? You see that right there?
So if I can interrupt one sec, because that's what I heard, and I'm like, wait a second, with my
Right here.
maybe because it's you're using a cash account and you're doing cash secured puts. In my account, I'm on a margin account. So if I did the first big sell, right, my broker's going to put aside all those funds, and I can't touch those funds to sell those additional puts. So that's where my thinking went off. Like, wait a second, how can you use those funds to finance the other?
No,
puts?
I'm using the premiums. The premiums.
No, but you still have to buy.
Right,
Like,
but your broker
yeah.
assigns those funds. Like
But I mean, we got to look at the account, right? We got to look at the buying power. We got to look at the fact that there's a shitload of money there, and I'm using all of that collateral. 1.5 of that collateral is on that CleanSpark trade, or 2.2 of that collateral is in the CleanSpark trades.
Yeah,
but there's still a lot of money. You know, there's other money, right? There's another 3 million, 3.3 million, whatever it ends up being math wise.
It's no leverage. It's no leverage there though.
Right. You're not using those. Well, yeah, right. I think option, and you and I are thinking this along the same way, because we're using let's say a limited amount of money. We're not able to extend into that bigger chunk of change behind us, if you know what I'm saying.
No, I understand. The reason I wanted to have this discussion, guys, is because there's a lot of people with smaller accounts that have been following me into these backstop trades. Right. And I don't think that backstop trade is suitable for.
Correct. I agree. No, yeah, they'll get run over if we have that big day down move.
You follow me? Like, I'm trying to hide money for a year at a time, so to speak, because I don't want to have to mess with it. And I'm like, just give me my 30% and I'll go play with this money. And then I look up, and on that money, I'm up at 40, 50% because I think the trade's going to work out for me. But I'm like, I feel like you're going to do that with your $50,000, $60,000 account. You're like, what am I going to do the rest of the year? You know what I'm saying? You're going to find yourself very antsy the whole time is what I'm saying.
No, but I think you've made it pretty clear, because I have heard you talk about backstop trades. I think you made it pretty clear. This is a big boy trade. This is not for the beginner or even the semi, like the 1 or 2 year guy. This is a guy who's got deep pockets and has, deep, balls, and also has some knowledge about the stock and also how to maneuver in case it does, head south, because this could ruin someone's account. If it goes south, like Option said, if this thing heads south, you're going to have to sell like nickel and 10 cent covered calls. But hey, on that many shares, it'll be bringing in some nice rent mortgage money for sure. Yeah. But I wouldn't do this only because it doesn't fit into my profile for.
So the reason I came up with the trade, guys, is because mathematically, it was the fastest way to get the adjusted cost basis to zero.
Right.
Because I'm like, I can take ownership of 100,000 shares at 750 because I brought in 760,000 in credits. And I'm like, I can have 100,000 shares with other people's money. And then I'm in a situation where I'm gonna write these things up to $25, $30, even if it takes the next Bitcoin cycle or whatever to get there. I don't know how it's going to play out, but that's my thing. It's like I go super, super heavy, and then I scale out of the position, and then I keep the shares that I want. That's what I did with SoFi. That's how SoFi got so big, dude. There was times that I had $4 million open on cash secured puts, and I'm just ringing the cash register because it's a game of credits and debits for me. I'm just trying to collect as many credits as I can. That way I can look up and have an adjusted cost basis, very, very manageable for me, so that I can own a bunch of shares in companies that people might not even consider touching, but they work for my game plan, if you will. So not a traditional wheeler. I don't have these little rules of oh, I'm going to only use 5% and 10% and all this other shit that I see on X. And I'm like, bro, that sounds like you read a book and you really bought what the author had to say. And that's cool. I'm doing very unconventional things over here. If that makes sense.
Yeah.
But it's a discussion worth having because I do see a lot of people reaching out because we have the WhatsApp group or whatever for the members of the channel. And it worries me when I see a lot of them doing backstop trades. And I don't think that their accounts are necessarily capitalized for that. I think this is a
right.
$400,000 or $500,000 minimum account type thing. And if you want to do, 100 cash occur puts on something, then I think that kind of makes sense because you just want to really zero in on that stock. And I think I'm cool with that, but not like on $100,000 account and you're going to sell, 70,000 of that in one shot. Cause it's like, you can't afford to be wrong at that point.
Yeah, sure can.
Totally. Definitely.
Yeah, that's a lot.
It's tough, right?
It's a high trade, but like I said, you tie up so much capital, and then, you get some good.
So hear me out. You say you tie up so much capital, but where else are you going to make 40 or 50% a year?
Yeah, but you can without tying up that much because it's just a time trade. So that means you pretty much, if the stock don't move.
I'm saying I have this conversation a lot, and I always ask people, well, show me where you've made 40 or 50% a year because that's how I'm doing it. It's like I'm giving you all the playbook of how I do it. I tie up all the capital, I lock in the 30, and then I scratch and claw for the other 20 along the way, right? And it's hard to do, but that's the only way that I've been able to find, short of just getting lucky and buying fucking calls, because there's no other way to do unless you just own shares and they all Palantir on your ass. That's one way to do it, but how often is that going to happen in your trading career? So and again, this doesn't get me 40 or 50%. It kind of worked out the last year and a half that way, 2 years. But this is like a surefire way for me to hit my 25, 30% metric. And that's like right now, the hedge fund, since I founded it, is batting at 36% cumulative, like annually.
That's good.
But it's because I'm doing this trade, because I was like, well, what's going to differentiate me? You know what I mean? Like, I got to come up with something. Like I gotta come up with something. I think it can work with a $100,000 account. I don't know that a lot of y'all would have the patience for that, because essentially what Option and Uzi are saying is, well, you ain't got any more collateral to work with the rest of the year because the shit is all tied up on that trade.
Yeah, because that's what it is.
and then there's no theta being collected, right? Because the theta escalates as you get closer to expiration. Yeah, and then if you're not willing to sell pretty close to the money, well, there's no delta either. So you're literally just waiting like 90 days on dead money until the shit starts moving a little bit. You gotta. I'm just saying, for people that understand the Greeks, that's why
it's just a time trade that's out. And with the collateral that you have, I'm sure it's other things that you probably can do.
For sure, but it would require more time management, right? So I'm looking for things to, how can I lock in then 30% and call life good? So anything to add, Dallas, and then we'll wrap it up. And then I just want to ask y'all one question about the NFL before we wrap it up.
Yeah, I feel like it is a larger account trade, but also, I feel like I mentioned, I just feel this would only be deployed when you just get stupid prices, which is when you really did it. When Tesla was really low, I believe you did it, or maybe it was with TSLL. I think it was with TSLL.
Yeah, I did bet 1,500, 2,000 contracts on TSLO at 773. No, at 573. At 573.
So to me, that lessens the risk a little bit. It makes it more worthwhile. So I would just be really picky when I actually utilize it. That's all.
For sure. Agreed.
Like I said, I like to trade. I just, me, from a risk perspective, right? I always look at the downside of it, and that's where, if it took a major turn for the worse, it can get a little
They better not be buying another jet. Let me tell you that. They better not be buying another jet. That's what I'm saying. Yeah, can we talk about the NFL real quick? Because I gotta go. But
Man, look,
this is the question. This is
Okay.
the question. These guys are Baltimore fans over here on this side. Uzi, who's your team? Are you Jets, Giants? What are you?
I hate to admit it, man. I'm a Jet fan. Yeah. I grew up 5 years old.
I thought you was gonna say the Giants, Uzi. I thought you was gonna say the Giants.
Nah, man.
I like the Jets. I was halfway asleep watching a Kansas City game on the recliner on Sunday, playing the Buffalo Bills. And I would hear the commentator, I want to say it was Tony Romo, former Cowboys quarterback. And then he was saying things like, that's not a catch or whatever. It was a guy from UT Austin, Xavier Worthy, this dude that has like the fastest 40 in history or whatever for the NFL. And he like pinned the ball down, and it's pretty obvious that it's not a catch if freaking number 88, if that one wasn't a catch against Green Bay, right? Brian, if that one wasn't a catch, there's no freaking way this other one's a catch. And then the other dude, what's the guy's name from Buffalo, the quarterback? What's his name?
Josh Allen.
Josh Allen. I mean, if that ain't a first down, I don't know what is a first down. And I love me some Patrick Mahomes. I think he's a stand-up guy. I love the Chiefs. I'm even an Andy Reid fan. But is the NFL rigged to make sure that these people win and he's the first one to do the three-peat? Is that what's going on here? Because they've been telling me this for 2 years now, and I refuse to believe it. But this is the first time that I've actually legitimately tried to pay attention, and it feels like Patrick gets every freaking call, bro. Like you can't even touch him, and it's a roughing the passer or something. I'm like, is it rigged? I mean, because they played Baltimore. I don't know if there was any sketchy calls on that game. I didn't follow too closely. So let's take it from Dallas, and we'll wrap it up with the NFL talk a little bit.
Yeah, it's rigged because it's Taylor Swift ever since she entered the picture, and it's Travis Moderna Kelsey, who is on every vaccine commercial 2 years ago. So yeah, I believe it is because they want to, put her, she's a billionaire by now. And so every time he makes a catch, they pan over to the box seat where Taylor Swift is sitting in there.
Yeah, and it's good for the ratings, I imagine. It's good for the ratings. What about you, Option? I feel like you feel more strongly about this than you do my put credit spreads.
I don't feel like the game is rigged, right? I mean, this is why. Why would I risk billions and billions of dollars to rig a game, right? Sometimes you have bad calls, right? And then that wasn't, the ball can touch the ground. It just depends on how the ball is controlled. So it's a whole lot of little different rules, like you said earlier, that we don't know, but we just see the outcome of it. So no, I don't believe it's rigged. I believe it's a fair game, and you have bad calls. That's with anything.
Dude, when Patrick Mahomes slid, the other two players hit each other, and they called it a
roughing the passer on him. Yeah,
it's like
you're gonna have bad calls. Sometimes the bad call go in your favor. Sometimes it doesn't. You have bad calls.
Nah, those calls go in their Chiefs' favor.
Uzi, bring us home, Uzi. Is the shit rigged or not? Because I'm starting to lean more on the side of it's rigged a little bit.
I think it's rigged. And just to bring up another side note about about a football, right? So Tom Brady, the golden child, is gone. They need a new golden child, and that's Patrick Mahomes. So they're going to push everything in his favor, I believe. And one more thing is, ever since they legalized gambling in all the states, pretty much all the states, have you seen from hockey to football to every sport, there's such crappy calls now? Because I think, because I'm a conspiracy theorist, that somebody's on the take in every game. I just believe that. I think somebody's on the take in every game. The mob or the gangs, whoever, they're getting to the guys.
That referee in the NBA with Donaghy or whatever his name was, they made a Netflix special on it where he was talking about it, like the point shaving or whatever.
Right. Oh yeah, on basketball, right? Yeah. Yep.
I don't know, dude. I feel like the Chiefs have a real good team. I don't even think that they need the assistance from the referees. But I just feel like whenever the same team seems to always is the beneficiary of these quote unquote bad calls, I mean, you have to wonder if it's like murder or manslaughter. What's the difference? The element of intent, right? Like murder is with the element of intent. Manslaughter is lacking the element of intent, right?
I believe all teams get the same calls, but people just put more emphasis on the Chiefs calls. Now, I'm a Washington Redskin fan, right? I like the Redskins.
Commanders, bro. We're in 2024. You can't say Redskins no more. Archer, what's wrong with you? People are sensitive, bro.
Look. Well, I have a whole lot of teams, right? Pittsburgh, Redskins.
I'm with
Yeah,
I call them the Redskins. I ain't got time for that.
Me too. I mean, I grew up watching Joe Riggins and Joe Theismann and everybody.
Yep. Riggs.
Like, you know, they call Fort Bragg, Fort Liv. I call it Fort Bragg, right? So, but anyway, that's something else. But, you know, I just think it's more emphasis on his plays than the other plays. And then that makes us, you know, as watchers be like, oh, man, he's getting these calls. He's getting these calls. I just don't think they're going to risk billions of dollars to rig a game. What's the purpose? What do you get from it? What do they get from that?
Well, I think that, like, for instance, I'm a Cowboys fan.
Mm-hmm.
If the Cowboys were to win a Super Bowl, that's a lot better for the league than, say, if the Ravens win the Super Bowl.
Great.
I'm just talking about the economics of it, right? Like, I'm a Lakers fan, and there was a time, it was like the 2001 season, maybe the 2002 season. It was when they were winning their back-to-back the first time with Kobe, right? Kobe and Shaq.
Okay.
They were playing the Sacramento Kings. The Sacramento Kings had the better team. But, dude, it just seemed like every call went the Lakers' way, and then there was like a missed shot, and then it miraculously went the right way, and it was tipped to Robert Horry in the top of the key, and this dude does a miracle shot, and that secures their trip to the finals to go, win another championship or whatever, right?
He had to make the shot, though.
No, I hear you. But I'm saying if you looked at the game closely with an objective eye, and I did not have one while I was watching the game, I went back and watched it after when my buddy pointed it out. My God, dude, that has got to be one of the worst referee game that I've ever seen. Like, dude, and I know that you could say, oh, well, like Shaq never got calls. If you really talked about like this dude got fouled every time, you know what I'm saying? He'd be at the free throw line 40 times a night or whatever, and I get all of that because he was probably the hardest person ever to officiate in the NBA.
Absolutely.
I just feel like there's I don't know we're off on a tangent, but it's all good.
Yeah, it's all good, man.
Dude, I really feel like it's rigged a little bit. And I think ever since Taylor Swift came into the equation, they see how many more people, like there's got to be the Nielsen ratings or something. They have to have these little gauges. And there's a reason that they show this woman on the screen all the time. I mean, dude, all Kelsey has to do is like get him offside. He didn't have to make a play. And it's like, I feel like there should be like a Taylor Swift cam in the Super Bowl. And I guarantee you she's going to get at least, the over-under is going to be 10. I think she'll get over 10 little, what the hell's her name? What is Taylor up to? Like, I think they'll put it on her at least 10 times because she's drawing in an audience that has absolutely zero interest in football. They're more interested in the romance that's going on between Taylor Swift and Travis Kelce.
So is this the setup to say that the Chiefs are going to win?
Oh, I think it's a horrible vision. I'm doing a parlay.
I can bust up on the Chiefs.
Chiefs in the over. I'm taking Chiefs in the over, and I'm putting five.
What's the line? What's the line on that? Like
they're -1, and I think the over is 49.5. I think they'll have 49.5 points by the middle of the fourth quarter. They'll probably have like 30 at halftime, dude, because Jalen Hurts is the truth.
I don't know, man. It's gonna be hard, man, with Barkley back there.
Yeah, but dude, Barkley's like having a passing game. This dude does nothing but 60-yard touchdowns. It's incredible.
And the way it looked last week, Jalen he didn't look hurt. He took that brace off and played very well.
They played the Chiefs in the Super Bowl a couple of years ago, and he was the better player that day, I thought.
But the addition of Barkley, man,
I'm wishy-washy. Maybe I only take the over because I know the overs are for sure. So I think that I'm going to take the over on that game and call life good because I do think that the Eagles are solid. I thought the Commanders or the Redskins, I thought they were going to give them a better game.
Nah, we can't stop that. We can't stop that run. That run.
That dude, Barkley's the truth, bro. Like my goodness, dude. Wow.
Did
go ahead, Zuzi. Go ahead.
No, I was just gonna say, did they post the over yet? No, right? That has not out yet.
49.5.
Oh, it is out. 49.5.
Yeah.
Then that defense that they have is, they only rushing 4. And if they getting pressure on you with them front 4, man, I don't think it's gonna be over. I think it's gonna be a pretty tight game, man.
Pretty close. It could be close. Yeah.
So, guys, one last thing. That way we can just end on an on-track note, if you will. Everything I thought was gonna expire out of the money, and then now all of a sudden, dude, I feel like I might have to manage this stupid cover call on Nike of all companies right now. What happened? Did Nike fix all of their issues? Because when I sold this thing, it was trading at like $72, and I'm like, I'm gonna sell the 77, ring the cash register because this is against long calls. So, I'm doing the poor man cover call campaign. This is round 1, so I'm already off to a bad start. And I'm just like, now all of a sudden, and this thing was like at $73 not long ago, and then now it went over 77 earlier today. What's going on? Any words on Nike? I mean, what's going on with Nike? I mean, because I was like, I got a pair of On Clouds in the closet that I received for Christmas. Bro, those shoes are legit. And I know Nike's a lot more than just tennis shoes, so don't bother with the chat or anything. But man, dude, like they got serious competition. I think there's that one company called Hookah or something like that. Hookah. I imagine those things look like pillow tops too. They got these big old soles. I don't know. What do you think about Nike? You've been in and out of Nike, right, Dallas?
Yeah, I just bought back into Nike. Now I didn't even look at the business, just on a technical basis, coming back to like $68 to $70. Super strong, historical support, as Bulls and the Bears likes to say, been support for many years. So. Just bought it from that and figured
historical support, bro. Historical support.
That's what I said.
Oh, shout out to Matt.
Yeah, that's what I said. Historical support. Yeah, and I'm like, you know what? It gives me. I did leaps, so I did 67.5 and 70 leaps, 18 months out, and it gives me, the ability to sell more options on. Collect more income at a level where it's just like no brainer for Nike.
What about you, Option? Do you have any opinion on Nike? Do you really think it's the whole woke thing? Is that really what has them down in the dumps? I just thought the numbers just suck across the board. That doesn't help. But the world's a lot bigger than what's going on in this country, guys. I think that the numbers in China have been down. I followed the story a little bit. This is a very recent position for me.
What you say you just bought call leaps?
I bought leaps, and then I am selling cover calls against those leaps, and now those damn cover calls they were for 77 this Friday, and now they're like legit getting challenged. Still very manageable situation. I could roll the damn thing, or just depending on where it's at, take a small loss on the cover calls and even offload my leaps and be done with the damn thing, and for a pretty nice profit. There's ways that I can still play it and make money. I just didn't think I was going to have to manage it, is what I'm saying. And sometimes you sell a covered call pretty out of the money, and then now you find yourself managing it, and you're like, I don't even know why I'm managing it. Like, what's going on with the underlying now, or is this just a technical issue?
Oh, I don't know, sir.
You got a Nike
How
hat.
about you, Uzi? What are the charts telling you? I know you're looking at the
I'm
charts.
looking at the monthly, and I can agree with Alice. You know, this began its big move right in the end of, let's say, 2018, and once it broke out on the monthly, it went from like 65 to 179, and now it's all the way back to, you know, came back to the 60 area, 69, 68 on a monthly, and it's right above the 200-day moving average on the monthly. So all that is huge support. And then on the daily chart, it just broke through a descending trend line, and it's in a wedge. It's breaking right through a wedge with a descending trend line. So this looks like it's probably going to do a retest of that descending trend line break, and then take off. So I think technically it's going higher. So the leap should do well.
Talking about technical analysis in front of option is like talking about.
Was he rolling his eyes? I wasn't watching.
It's
Oh,
like,
no.
it's like talking
no,
about,
that's cool.
it's like talking about the Jade lizard in front of TJ. It doesn't line up.
I mean, it's hard, right? You know, it's very hard, right? I'm not smart enough, right?
What really doesn't line up for me, and for the life of me, I just don't understand why I despise call credit spreads so much when they do make a lot of sense. You know what I mean? Like they've made a lot of sense to me for a while now, but I just can't seem to pull the trigger on them, especially live on the channel. I'm like, dude, like the minute I have to start managing that thing, especially where y'all are like selling the short call, like right at the money. I'm like, dude, I'd be doing these things like I would do my put credit spreads way the hell out the money, and I don't want to mess with them.
So let me give you another one. So say for instance, like sometime what I do, if I want to get, like say for instance, volatility is low, right?
Yeah.
And I put on a short, a call spread, and I feel like I want to start accumulating a long position. I sell the credit spread, and no soon as I get the credit for that long call, I take the short call off. Now I'm out in distance and I'm holding long calls for free. Right?
Yeah.
So if the stock go up, now I'm going to take advantage of all of that.
So you're using it as an instrument to finance your leads,
Exactly.
or not? Was not a lead.
Create long calls for free, and you don't have to hold it off. You get that one good drop. Let's say the call you purchased was worth $3. Soon as your short call make $3, take it off, because now you done purchased that long call. So I
like it. I got to run, guys. Appreciate you guys. Hope y'all got value. If you have any more questions, get with me on the WhatsApp if you're a member, and let's keep the conversation going on the Backstop Trade, because it's weighing heavy on my heart when I feel like I know the trade works for me and I can manufacture the win, but I've seen some Backstop trades that some of the members are doing, and I'm like, okay, I think it's going to work, but it wasn't necessarily an ideal setup or ideal for that particular account. I feel like the risk and the reward isn't really commensurate there. Like a lot of times I'm also just doing the Backstop Trade because I don't want to have to handle that portion of the portfolio, So I'm just like, let me kick that can down the road. Let me go grab this money and play. And I'm like forced to play a little bit smaller along the way, because sometimes I feel like I have so much capital at my disposal and I have itchy trigger fingers when it comes to buying the dip. So I have to protect myself against my tendencies. So you got to really understand who you are and how you operate the hamburger stand. So I know what my deficiencies are, because I've gotten a lot of coaching along the way. And I'm just like, dude, having too much money at my disposal is not good for me, because every dip looks juicy, dude. Like avocado dip, the kind that's got the good cholesterol, you know what I'm saying? And then I just want to always make sure that I'm hiding this money over there because I can free up that capital if I really needed to go buy a massive dip because, Tesla did something crazy and went to 200 or something like that.
Mm-hmm.
So I always know that I got that money over there. It's like a CD, you know what I'm saying? Like in my mind. But that's giving me some pretty good yield while I'm waiting for that opportunity. See, there's wrinkles, right? That I can't like share everything all the time, because people only retain 7 to 10% of what you hear and see for the first time anyway. So I feel like I'm just wasting my time. But there's reasons behind everything. I always tell people, dude, the balance isn't an accident, dude. I analyze this thing over and over and over again, left, right, forwards, backwards. It's just the way you got to do it.
Yeah.
You got to be a student of the game, Like I have conversations with Option earlier, and dude, when Dallas called me, I was like, dude, I literally had just drank 2 Tylenol. Because it's just like, I was like, oh shit, I felt like I sat through a freaking class at UT Austin again. And it's just because when you're really trying to absorb the information, it takes energy, right?
Oh yeah.
When you're versus I'm just listening to you and doing lip service, knowing that I'll just go watch it again. But I was like, let me just like really zero in and pay attention, be an active listener. When you're an active listener, it's exhausting. And now it's just like, dude, this is making a lot of sense. Like there's so many ways that are so much more capital efficient than just being lazy. Because sometimes I'll just sell the cash secured book because I'm lazy.
Well, that's the thing. The backstop trade for you and your your schedule, especially with you're busy with your wife and family, it kind of works for you, right? You don't have to do a lot. It's a lot of thinking and it's a lot of planning, but you don't have to be at your desk 5-6 hours a day, which is good.
Dude, I have this vision where all the portfolio is going to be backstop trades and I'll just have leaps and then I'm selling the calls whenever I feel like it. And I'm just collecting my theta, but slowly, right? Because it doesn't really ramp up until I get within, 6 months of this thing.
Mm-hmm.
Yep.
But I'm also like, I get to go through earnings reports and I don't have all that stress either. Because I almost turned it into like the way I feel about the 401k. Have you ever listened to an earnings report and then you log on to your 401k and see how it's doing? Nobody does that. So
you ever thought about just doing them in ETFs instead of actual stocks, though?
There's just not enough juice in that lemon, dude. And I get it. There's plenty of liquidity and that's all great. It's just not my thing. I'd like to pick. I feel like I can pick winners. So why am I going to do that? Why am I going to do that? It's going to pay me pennies on the dollar for what I'm already doing just because you're lazy and you don't want to do any homework on a couple of tickers. That's probably an easier place to go hide money, but I'm not going to be able to tie up that kind of money and get a substantial return. And we can go through that exercise. If anybody wants to pull it up, go tie up 1.5 on the Qs and let me know how that works for you for a year. It's not going to be very appetizing to do so. Because again, you got to keep in mind when I got 428 grand, right? We can end on that exercise if y'all like. I think it's so y'all do the Qs or the SPY. Pick one.
I gotta go, guys.
Take care, man. Take care, Dallas.
Let's do the Qs.
Okay, good to see you, Dallas. Good to see you, man.
Yep.
Yeah, great seeing you, Dallas.
All right, see you guys.
So, we're going to go over there with the Qs and we're going to go the same cash. We're going to go the same expiration date, which is this guy right here. And we're going to bank that everything's going to be good for 352 days. And we're going to go a little bit out of the money, something like around right here. And that's a little high. So maybe like right over here, around a 30 delta. So that matches up. And then it's like, okay, well, how many of those contracts can I do? Is it, I don't know, is it 100? No, it's at 100. I don't know if I have, so it's 40. See, that already takes 4.9 and it only yields 232. So you see how that's just not appealing already. You know what I mean? It's just not appealing at all. To tie up that kind of money for that little of premium, and you don't have a lot of a buffer to the downside, like that, it just doesn't work. It just doesn't give me the yield that I'm looking for.
Well, that's because I mean, then you have a different, you know, that shit. How much
That's
is
a 30? That's a 30 delta. That's a 30 delta right there.
Well, you might want to go try something a little bit smaller than the Qs, though.
That's 4.7% right there, Joe TJ, on your money.
What's up?
That's 4.7%. If you made that in how long is that? How long would it take?
352 days.
Oh, so it's a year. All right.
Yeah, but I'm saying if we go look at the actual trade that I have on, let's go look at and it's changed a little bit because CleanSpark's come down slightly, but it's still about even right now, right? As of close today, it's about even. So you'll go look at it. It's a 19 delta. So I mean, if deltas mean anything to you, you know, this is a less risky trade from a delta perspective. But it yielded a lot more, like, you know, probably 4 to 1 on the capital.
Yeah, because the IV
on the premium.
Yeah. It's got a
But
higher
again,
IV.
you got to find the right situation. This would have been optimal if CleanSpark would have been trading at like 750, because then I could have probably gotten like 550, 600 on the premiums. You know what I'm saying? Or I could have been, you know, done like the 5s or something like that, or if it had a 6, depending on what they're offering. Because I just recently did this on TSLL and made a ton of money. When TSLL was like in that $10, $11 range, I sold a bunch of contracts at 573, and then it went on a run, locked in like $100,000, and moved the money over to SOXL. Was in that trade for like not even 30 days, maybe, locked in another 70, 80 grand. And then I brought all of that money over here and did the CleanSpark trades all with the same collateral. So I've already got 2 winning trades that I'm bringing into this one. If that makes sense.
You got to get out of here too, man.
But I got to rock, man. I appreciate each and every one of you guys. A good turnout, man. A bunch of people on X, some people on YouTube. Appreciate each and every one of you guys. Make sure to like and subscribe to Alice's channel. The No BS options and option as well, man. I appreciate you. You're not on X, right?
No. I don't do social media, man.
Okay. And then Uzi, real quickly, dude, 30 seconds. Do you want to plug your Discord real quickly? Because you have a situation where you help people, right? And to sell options and whatnot. Yeah.
It's called the Option Selling Institute. We do all premium selling. It's mostly all premium selling. If we go long, like I said in the last episode, we usually finance it with the premium from another trade. So we'll buy a call spread, we'll buy a Brooklyn butterfly, but we'll be selling puts. We'll put spreads, we'll put ratio spreads. We do pretty much all the different strategies that are available out there. So it's pretty fun. It's pretty fun and we're profitable.
Yeah.
And yeah.
You know, that's another thing, Uzi, that's great with selling shares, like selling put ratio spreads against your shares.
Yes. And call ratio.
That will give you more premium on the back end with no risk to the upside. So put ratio spreads work just as well too.
Yeah, that's something that TJ you might look into too. This way, if the stock goes down against you, you'll make profit on that long put until you get signed or until you roll. So
yeah, I feel like you guys could be stock soulmates, option soulmates.
yeah, me and Option hang.
Yeah.
Okay, hey, listen, when you get to Connecticut, ring my phone.
Yeah. I'm going up there. I'm about to leave here short. I gotta get some sleep, man.
All right, man.
I gotta go. TJ the Will Girl signing off as always. May your sky stay blue, stock screen. Peace out.
All right.
Okay, guys. Thank
Good
you.
evening, man. All right.